face. How's everyone doing today? European elections, not major impact. So, I asked myself, is ultranationalism bullish or bearish the euro? For that matter, is it bullish or bearish the dollar? Call it what you want. Is fascism bullish for currencies? Let's see. I would say that eventually that would be very bullish for gold and silver, ammunition, and freeze-dried food. What do you think? So anyway, the reaction, I'm going with what happened last week in the dollar is important. So we've had a pretty weak retrace, but so far back to this 97.80 level. Maybe that's all it has. But I'm going to be patient, thinking maybe there's a shot for 50%. 98 would be 61.8. The 2-week off number is 98.02. So this is my preferred level for using dollar strength to sell into as an opportunity from last week. Everyone with me on that? Also looking at euro pound now, it's been I had 2 trades, one worked, one didn't last week, and was there for part of this, and then got out, lost money in this topping kind of distribution pattern. To me, it looks like we could go to 88.80, and really, when you look at it, probably shouldn't even be trying to top pick it. It's above all the daily moving averages and even the weekly. I mean, really pretty powerful, right? But I'm thinking that when you have such an important level as we had down here at this 86.5 level, or maybe these highs up here at 86.76, that there's potential still after maybe another high, because I am getting some negative momentum readings up here, for a pullback to the breakout, similar to the same scenario that I'm looking for in Aussie Kiwi. Okay, so we had this big up on the Australian elections last week, left gaps. See this gap here? And to me, it looks like it could be forming some type of head and shoulders, not making much progress. I guess the bulls could say they can't fill the gap yet, so maybe it's okay. But when I look at the daily, I think there's still potential once we take out this moving average to see some fib levels tested in the near future, keeping powder dry for this. Everyone with me? Aussie Kiwi for a long-term buy, which I think will work out if the dollar is topping and headed towards a lot of the dollar bears are talking 93, and it's just a correction in the Dixie. So in that environment, you could probably be, short the dollar against a lot of things in the upcoming week. So I think this is an important week, even though you have month-end flows, which distort things, to see if the reversal that we had in the Dixie is real. So far, there's no reason to doubt it. And we'll see how much of a rally could generate. If this is it, it's going to look pretty ugly back under 97.5. See the support line plus the moving average here on the 4-hour. We get through there, then I'd be expecting a test of under the 97 handle coming up. So again, trying not to have FOMO. Maybe, what you do is if you're afraid of missing something, you just put a piece on, and then you hope you're a little early. And if you're a little early, then maybe add another piece at 50% if it gets up there. So your leverage is really reduced, but at least you're there, you're paying attention. So that's what I'm seeing. Also, US dollar yen, if we are going to get a dollar rally, holding this major support, had a very negative week. I would love to see it rally back get through 980 and get one more test up here at 1080. We'll see. I just can't short it in the hole here. And just like the dollar, I'm trying to be patient, see what kind of pop we get here. One thing that is very interesting on a more macro basis are the interest rate futures. So we're starting to get some three drive formations developing here. And I know a lot of guys have even lower numbers. I've been talking about 220 based upon this potential three drive they could fill out down here around 220. You see this? Here's one. Here's two. And we're setting up a third. So far we have divergence. Actually, the 30-year is testing it today. So I believe DSI is up around 80. I'd be very careful being too bullish bonds right here. Not just because of the DSI, but because we're really not confirming. We are in the shorter term stuff, right? See this? And so far, the third, maybe we have one more. This is one. This is two. You want to see it on some of the shorter term time frames, hold the 30 RSI level. So that's going to be a big deal because that's going to have a lot to do with what happens with US dollar yen. So we'll see if we could generate any kind of rally. I still think the yen before intermediate term buy set up, and then I'm going to pass it over to Blake. I still think that this line down here in the yen is a magnet, and just some measured moves come in around 107.80, 108. I still think we're going there. So give me a rally here in the yen and let people think it's a double bottom, even if it rallies back to the moving average. I don't think we're going to fill the gap. So far on this attempt, we didn't fill the gap. Let's see what happens on this rally. And once we take out 109, I don't see anything but air for another 100 pips. So I want to let you guys know that the partners are extending this Memorial Day promo. Anyone take advantage of it over the weekend, Memorial Day? I believe it's the last promo until the fall, maybe Christmas. So I think there's one more day, 1 month free, and some discounts on the semi-annual and annual. So this is, I mean, just to get a feel for it, you'll know in 30 days. I guarantee you'll know in 30 days whether or not you want to continue. I really like a 90-day period, but this is 6 months and this is a year. So this is not a bad compromise. And, you know, I think you're going to be paying, what, about 14 pips for a few months? 1 month, 14 pips. So 7 pips a month or so. Pretty good deal. I plan to pick up 7 pips here and there off the stuff that I get when I go to my dashboard. There's some pips in all this research. The guys in the private member chat can agree with me. Just following Amanda in private members chat. I mean, she's been bearish cable forever. It's trying to bounce, but she's been milking it like a cow. Not Amanda, the cable. Okay, so encourage you to do that. Encourage you to get a hold of our sponsor as well. And besides getting a good deal, you could be reimbursed. You should be getting rebate checks from your broker in one form or another. Maybe a Ferrari every month or something like that. But Jason and Trent, they know everyone. And they'll put you in touch with the right broker. And, you know, I know a lot of people that have more than one account for different purposes. One might be their day trading account. One might be their swing and position account. No law against it. And I'm going to turn it over to Blake and see what he's thinking this morning on this shortened week. Hope you had a nice Memorial Day. I heard you were having a barbecue, buddy. What did you cook?
I did. You know what I did this morning is I forgot to set my alarm. So
well, look at your biorhythm. You woke up.
Fortunately, I did. I have a
backup.
I woke up a little.
The rooster in the backyard got you up today, buddy?
No, it was just, you're right, it was the biorhythm. Fortunately, my body got me up at, not early, but not super late, and in time for me to be here. Fortunately, I've had an opportunity to take a look at some of the charts. Unfortunately, fortunately that the market hasn't moved a whole lot.
Yeah.
So because the market hasn't moved a whole lot, that I'm not. It's the worst days are when I get up and I wake up late, which isn't often. You guys listen to me every morning, so it isn't often that I wake up late. But the worst is when you wake up late and then you missed a 150 pip move and some massive move happened overnight, and you're like, oh man, if I would have just got up early. But unfortunately for all of us, there isn't a whole lot happening as of right now. So. But thanks for the overview, Dale. I kind of needed it anyway this morning.
You're very welcome, buddy.
Yeah. So anyway, what I was looking at this morning is I was continuing to look at the S&P, and we noticed that the S&P is still consolidating. And if you listen to the week ahead video over the on Sunday or maybe yesterday, I'm really just kind of focused on this 2,800 level on the S&P. As long as we hold above it, then you can't be too bearish risk. And you'll even note from the overnight session, we're just still in Monday's very benign price action. We're just holding higher lows. So as long as we continue to hold higher lows, I'm a little nervous about shorting risk, but at the same time, we have to break above this resistance. You can see here, right at 2840 would be right here. Let me undo this.
Nice look, Blake.
Well, it's right here. Once we break above this, once we break our this triangle resistance or just down, that downtrend line. As soon as that happens, that's where it starts to open up a lot of opportunities for us. And I think if you're wondering why, most of these pairs have 20-30 pip trading ranges, because no one wants to step in and be aggressive right now, which makes sense. Like I don't know if there's any reason to be aggressively buying or selling anything at the moment. But one of the things that leads me to believe that equities are actually going to move higher versus move lower is, and maybe, you know what, before I even say it, Dale, are you still here, Dale? Oh, it looks like he just stepped away from his desk.
I'm here, buddy.
Okay. I'm gonna ask anybody at home that's listening in, what do you think is on my screen right now? And I love to quiz you guys, especially on slow days like today. What is on my screen that makes you think that we might have a little rally and risk today? What do you guys see? And you can either see it on my screen or you might see it on your own screen at home. What do you notice this morning?
Possible double bottom in yen and follow through in the commodity currencies.
Okay, so you said little commodity currencies, the yen, and looking at the yen, I would agree with that. We got a higher low here. We're not selling off, breaking through 109. Another thing that I notice is we have the peso's weaker. These emerging market currencies. Take a look at the peso. The peso's weaker. We have now the Turkish lira is a little different. I haven't really been looking at the lira all that much because of just what's happening in Turkey just in general. But look at the South African rand. The rand is actually moving up into resistance. And so, yeah, we got commodity currencies that are stronger. I'm going to extend this out. We have commodity currencies that are a little stronger, right? That are holding up. You have some emerging market currencies that are a little weaker. You have the yen that's holding up. So there's a
Aussie
lot of
yen
things.
looks all right too. I mean, it's trying. The Aussie yen's trying to carve out something down here. It looks like too.
Yeah, and actually, you know, I was reading a bank report. I didn't get a chance to do a lot of research last night. Usually on, you know, Sunday nights, or last night would be Monday night, obviously. But before the work week, I tend to do a lot of research, and I didn't do a lot last night because we had like 20 people over yesterday. So, and once everybody left, I went straight to bed. So I didn't get a chance to do a lot of reading, but I did. I was reading something from, I can't remember what bank, that was talking about the undervalue on undervalue basis of like the Kiwi and the Aussie at these levels. And whether you believe it or not, whether you think, you know, the Aussie or the Kiwi are undervalued at this point, as I pointed out in the week ahead videos, we've taken out some pretty big downtrend lines. Like for the Kiwi, specifically, because I'm long a little bit, but I mean, you take a look at this Kiwi. We broke this downtrend line. We have, like, you know, like a little inverted head and shoulder pattern, whatever you wanna call it. All I know is if we squeeze past this resistance here, this is the breakdown point. We start squeezing past this. That's when a squeeze really starts. So anybody who's short, they don't want to be short once we get past there. And when I trade, I try to think about what everybody else is thinking on the other side of the market. So let's say you're short the Kiwi, and you traded it long term. You shorted it when it broke through all this resistance here. You shorted it on this triangle breakdown, retested the trend line. You shorted more, and you've been riding this position for the last several weeks. You know, I mean, since, let's say, the beginning of April. You know, here we are a month and a half later, and once you get through this trend, this trend line, that's when you cover your shorts. Then the flip, then anybody else who's short, who's maybe late, that maybe shorted through here, they don't want to be short once you get past the breakdown point. So once we get above 65, 85, that's when things start to accelerate. So I try to think about that when I'm trading. What's the other person on the other side doing? Because for me, that I'm long a little bit, and I happen to have a position on, I start thinking about when I want to add, when I really want to start pressing hard in the other direction. You got to think about the pressure points that people feel as they're losing money. That's where I start to get a little bit more aggressive. So for right now, and you can see I have an alarm set right there. Okay, you can see that alarm set right at the 25, or excuse me, 65, 65.80 level. You start looking at the Kiwi. Kiwi is a very similar situation, or the Aussie is a very similar situation. The Aussie broke the downtrend line. You have a bear flag or a pennant formation that pretty much played out. So now, you know, there's like a couple levels, in my opinion, one of them being right here. Let me get rid of this. One of them being right here at this 69.65 level. We get past that, it starts to squeeze. We get back above 70 cents right here, then the squeeze probably intensifies a little bit. So these are, you know, these are just kind of the things that I'm looking at with these commodity currencies, because they're, you know, they're relatively firm. They're holding up pretty well. All right. Let's take a look at the dollar Canadian. Now, the dollar Canadian, we had the little false breakdown. I believe that was midweek last week, if I'm not mistaken, or was it the end of previous week? Anyway, that little false breakdown below that trend line, that's, you know, this is going to be pretty key support because it's longer term channel support. The dollar Canadian hasn't really gone anywhere, and which is interesting because when you have the you know, a lot of the other commodity currencies that have really come under pressure, like the Aussie and the Kiwi, the dollar Canadian has not rallied much. So, you know, this would be a pretty good candidate, in my opinion, for being short. I haven't shorted the dollar Canadian yet, but you have to realize that it is not rallied. Like the dollar Canadian hasn't rallied, where the Aussie and the Kiwi have really come under pressure. So, at some point, this dollar Canadian will probably roll over. But I think one of the things that's prohibiting it from moving much is we're starting to see crude oil, little weakness come back into crude, which is probably is what's really keeping us range bound. But if we see a rally in risk and we see a bounce in the S&P, then I'll be looking at the dollar Canadian as a short. But just remember, we're kind of in the same situation we were at last week with the S&P. I still expect a little bit of a bounce here, even though I think longer term we have this big double top that's setting up, but I think near term, and it's the same play as last week. Same. Let me grab my pen here. Same play as last week. I'm going to look for, a little bit of a bounce, and then, over the next week or two, I'm going to be looking to sell into that strength. Remember, we're in the actually, let me stop here for a second. Dale, you're here, right?
I just mute myself, so but I'm here.
No, you're a big seasonality guy, right?
Yeah, selling may go away.
Selling may go away. I mean, we're at that time that I really want to look for shorts in risk, but I just don't know if right now is going to be the time. I think, we're going to maybe get a little pop out of this, this wedge, this little triangle.
Maybe it tries 28.90 again, Blake.
I think 28.80, 28.90. I think somewhere up here is going to offer a better opportunity to be on the short side. I think it's we're going to get some sort of move that looks like that.
Steve likes reversals at the beginning of the month, so this is month end stuff this week. So a lot of book squaring and quarterlies and things like that.
Yeah, you're right. And yes, we are at the end of the month. There's gonna be a lot of end of month flows this week. Actually, the beginning of the month, I believe, is on. Oh, I thought it was on Thursday, but it's on Wednesday. Yeah, so the next couple of days is gonna be some end of month flows, which could push the market a little bit. But I think we really have to be on the lookout for a little bit of a rally in risk. I think a lot of people have been shorting this, this longer term, double top, and people are trying to get short some risk here. And I think
pretty big sentiment shift on the DSI, Blake. That we were at 90 in NASDAQ. I think we're down to what, 50 now?
Yeah. A lot of actually. I was reading last week, a lot of funds actually went net short last week too.
Yeah.
So, which is interesting. It has been a pretty big shift, but that's one of the other reasons. Like, the shift happened so quickly as far as sentiment goes.
Yeah.
Let everybody get squeezed out a little bit. Everybody that turned bearish, let them get squeezed out, and then once we get a little pop in risk, then we look to sell it. So, what does that mean for currencies? Well, for currencies, that means that we might see a continued dollar weakness here. I mean,
concur.
You got the dollar, and let me. I think I have all this drawn up from the weekend video. So let me just kind of delete.
So emerging markets finally have a chance to outperform or hold up better with a weaker dollar than the U.S. market.
What you're going to see is you're going to see like the emerging market currencies like the peso, right, or the and probably some lira as well, but some rand. You're going to see those really come under a little bit of pressure right now, which is fine. That's what's going to tell us that risk is bouncing. Also, that the dollar is probably going to come under pressure because the dollar will outperform against those
Emerging market currencies?
Those emerging market currencies, the dollar is going to outperform, but it's going to be underperforming everything else. So
I got it. Okay.
So just watch the dollar here, like this double top. You guys know that we have this. This is the big support zone. Once we break through that, if we do, I should say if, not once. It's just if. It's once we break through here, this is what really opens up, in my opinion, some downside in the dollar. Thought the European elections might, be the culprit and move the dollar a little bit, but it really hasn't been the case. It's I thought it might move the euro a little bit more, the cable a little bit more. But what I'm going to be looking for is I'm going to be looking for a move below this support, and once that happens, that opens up a lot of opportunity, in my opinion. So with that being said, let me go ahead and see if Stelios and Steve are here.
They're not.
Good morning.
Good morning, guys. Yeah, I was running a little bit late. I forgot to set my alarm. So,
you still woke up at like 3:30, didn't you?
I still woke up at 4:30, not at 3:30. I woke up at 4:30, so I still woke up early.
Get that checked out with the doctor.
The rooster woke Blake up.
Yeah, right.
We're up before the roosters, Blake and I.
We are.
We wake them up.
We do. So
Paulie wakes up before the rooster goes to bed.
Oh my God, Paulie's an owl.
Yeah.
So I wanted to mention to everybody that's listening, just remember we have the Memorial Day special, and Steve, how long are we extending that for?
Until the end of the week. That's it.
Until the end of the week. Okay. So remember, we only do specials like maybe 3, possibly 4 times a year, depending on how we're feeling. Usually it's 3 or 4 times a year. So this is one of those times that if you want to take advantage of our discounts, they are extended till Wednesday. So it's buy 1 month, get 1 month free, 20% discount on semi-annual, 25% discount on annual subscriptions. Usually at the end of the year, we offer a little bit better discount, but if you're already part of the ForexAnalytix community, you can just upgrade at that point in time and get the better pricing. We always allow our...
By then, they won't care about the pricing.
What's that?
By then, they won't care about the pricing.
No, I mean, well,
anyway.
Look, I like to save a few bucks when I can as well. So,
Blake, before you go, yesterday's Memorial Day, and I know that's for the guys that didn't make it home, but I think it's also a good day to thank you for your service to our country, and I'm so glad that you got out of it without being unscathed because of all the lives you've touched by teaching and sharing your knowledge of the markets over the years.
Well, thanks, Dale. I appreciate that. It was I always like to say after the fact, it was my pleasure serving. But while I was doing it, man, it sure did suck. When I was in the thick of it, and with a rifle in my hand and in the jungle, people, I was like, man, I do not want to be here right now. But
I would have been. Well, you know what, Blake, I'd be crying for mommy. Okay. So anyway, thank you.
All right.
Buddy.
All right. You guys have a great one. I'll Steve, I'm going to pass it over to you.
Thank you, Blake.
Thanks,
Hey,
Blake.
Stevie.
Hey,
And Stelio.
how you doing? How are you doing?
Guys.
Hey,
Good,
Coach.
guys. Yeah, how are you guys?
Very good. Very
How
good.
have you been?
Yeah.
So
Both
we
have
had
vacations.
it's a particularly happy time for us here because following the European elections, we had a big shift in here in Greece in terms of the voting. But anyway,
Indeed.
so let me just cover what's happened basically really quick, and then you can take over. So we had the European elections, and the main trend was that the trend of the last vote 5 years ago in 2014 continued. So we had quite a lot of nationalist / populist parties taking power. You have the example of Marine Le Pen still coming out top, albeit with a very small margin, but she's still on top in France. And I was reading today that overall, if you add up the number of seats in the European Parliament this time round, around 25% are going to be from parties which are deemed to be nationalist or populist or basically not mainstream. So that's up apparently from around 20% last time round. So and I've been speaking to a few people about these things, and they said, look, in France, Marine Le Pen is ahead again, but her margin is small. It was expected, so it's not a huge deal. Well, I'm looking at the change. Maybe it's not, but it still remains a very high percentage, right? And a party like that.
And there's a clear trend that the politicians seem to be ignoring, and instead of looking at the causes of this trend, they're just hoping, crossing their fingers and hoping, and that's not going to end well.
There is a reason why this is all happening, and you have to tackle it in order to reverse it, and they're not doing anything.
Exactly.
It's been, we've seen it here in Greece as well. It's been a vote of a frustration vote, and you have to do something about it. Now you see in the UK, the Conservative Party and the Labour Party have been demolished, and what do the Labour Party do? They come out and say, "Oh, really? We would need to have possibly another referendum," and talking stuff like that, which is really not going to, it's not going to fly with the people who actually voted to leave, and to get these people back from their this frustration vote. So, what do I make of these European elections? I can't see anything positive about them, I'm afraid, even though many people say, look, it's all priced in and it's kind of stable. The turnout actually was higher this time around than last time. So that shows that people are worried, from both sides, even the traditional sides, the conservative parties, they're voting more because they can see the threat coming, but, it's not enough. Something has to be done. So my takeaway from all this is I cannot see this as being Euro positive. End of story. Is it Euro negative? Probably yes, because you see
I think it's the market is not going to react to it yet. Still, you know how it is.
Yes.
It is potentially long-term Euro negative, but I don't think that the market is really willing to price in any repercussions yet. Coming out of that. I mean,
that's why it hasn't moved either.
Yeah, but bottom line, there is not like there was a big shift of balance of power. Yeah, there is a clear slow trend towards that direction, but the market seems to want to ignore it until it actually becomes a tangible problem, right?
Yeah, it's like when they say, how do you become bankrupt? They're slowly at the beginning and then quickly in the end, So,
yeah, exactly.
We also had some comments from Italy's Salvini, and he said a few things. He said that we need to revisit the role of the ECB and how to change how the EU works and all that, pretty big words. And in the end, he said something that actually made me laugh. He said, and I quote, he said, "It's not right that Italian bond yields should be higher than other Eurozone countries. It's also not right that I don't have a Ferrari, but that's a different story. The bond yields will
add me to the list. It's not right that I don't have one either."
Yeah,
yes.
I mean, the yields will be where they want to be in terms of the market because they have to price in risk and all sorts of stuff. So
yeah, I can't really blame him because he's thinking like, the US, for example, doesn't have the yields it should have. Other countries don't. I mean, every single day we have less and less of a free market and more of a central bank manipulation. In essence, what he's asking is for a free meal. Like, oh, ECB, go out there and start buying my bonds. I want my bonds to be where the German bonds are.
It's a bit crazy, but that's what it is. And what else do we have? That's pretty much it. Actually, we had very little data out.
Yeah, and today we also have little data.
Yeah, we had actually the Swiss GDP reading was out, and it came out quite a bit better than expected. It came out at 0.6% quarter on quarter versus 0.3% expected. So that was probably the highlight of the day in terms of
the only problem with the Swiss, which is the same case with the yen, more or less, is that the Swissy does not respond as any currency should, positively with good local data and negatively with bad local data.
Yeah, when so you have example, the SNB involved as much as it is, then
So in essence, we've seen actually a little rebound here in the Euro Swiss. Well, theoretically speaking, that should have been, Euro Swiss negative, the good Swiss data, but it is what it is. Speaking of which, the Euro Swiss remains since last August trapped within this range, which is roughly like a little bit lower than 115 and 111.50 to 114.50, let's say roughly 114.80. So nothing actually, nothing, nada. I think it's part of it. They're keeping it where it is. Part of it, we haven't had any big, any big fears about eurozone, lately, and that's giving it range bound actually. Okay, Stelios, thank you for the updates. Actually, I was explaining during the weekend to a friend of mine that he was asking me if the euro is going to move with the European election outcome. I told him that it's more likely that the pound is going to move, which is exactly what happened. Actually, I mean, yesterday we did get a dark cloud cover here with the pound, seeing the strength of the Brexit party, which ended up number one, right? I mean, what did it get? Stelio, 31%. What was it?
Somewhere around there. I have to check, but yeah, it was easily first at the top.
Yeah. So actually, the pound moved more than the euro. Nothing, of course, significant. Nothing to write home about. Speaking of the pound, since we're here, pound has already reached the 161.8% extension of this last rebound. Also, at the end of last week, Thursday, I think it was, touched this horizontal support area in the 78.6 at 125.90, 126. Clearly remains under pressure. I wouldn't be surprised to see at least one more little push lower before perhaps getting some kind of a stronger rebound. What remains without question is that the pound has been one of the weakest currencies of the major ones. Lately, you can see Euro pound the same. I mean, Euro pound, near the highs, despite that insane 14 consecutive day rally higher. Actually, let's see here that we have the analysis. We had 14 consecutive up days. Then we had one negative day, and now once again we're up, testing the highs. We might see a little bit more of a consolidation, but from the Euro pound perspective, it seems to me that there's more upside. I don't know if it's going to be from here or after pulling a little bit lower. As you see, when it pulled down to retest the 200 daily moving average, that was enough. After just 1.5 days of weakness, and now we're about to retest that 61.8% fib once again. Now the pound yen, the past few days has been even weaker actually, because the USD yen being under pressure is helping in that direction. The pound yen actually has completed already the rectangle's target, because this was a rectangle. Once we broke through that support, then you could just extend the height of this formation and you got the implied target, which was roughly at 139, 139.20. We've already made it there. Regardless, the pair remains very weak, and it looks like the path of least resistance is still to the downside. 61.8 comes a little bit lower at 137.65. I really see no big reason of being bullish here. Quite the opposite. And I do think that the closest resistance area is at 139.80. Previous lows here for 3 days. It was also the 50% fib. Seems like a good short-term target for resistance, if you're looking for one to sell. Now, we have questions about the S&P, the Kiwi, the Aussie. I know that Blake already covered some of them, but I'm also going to cover them again. So very briefly, Aussie USD is trying to form some kind of a bottom here at the 78.6. Am I convinced that this is it? No, I'm really not. In order for me to be looking, for a squeeze high in the Aussie specifically, I would definitely need to see this 70.3 cent area getting taken out to the upside. As long as we remain below it, I find it likely that we might retest that area, but I still think that the bears remain in control. Now, the Kiwi from a technical perspective, looks better for a short-term squeeze because, I was monitoring this descending wedge. We've already broken above it. We now have spent yesterday and today, which is no surprise because, people were away from the markets, but consolidating, more or less doing nothing. I wouldn't be surprised if I saw another leg higher. Of course, as I said, the same deal with the Aussie because, another push higher for the Aussie USD also towards that horizontal resistance area I showed is not unlikely. The only difference being here that the area of resistance I'm looking here for the Kiwi is actually higher than the one for the Aussie. It's actually roughly at 67 cents. So it's another 150 cents to the upside. Aussie Kiwi also consolidating here. I think that as long as we remain above 1052, looking higher is not unfounded. I think we can easily come up and retest once again this 1073 area, even move higher from there. Now, the Aussie against the yen, I think it looks, better to interpret here from a technical perspective. The Aussie yen looks to me like it's consolidating in some kind of a pennant, flag, whatever. We need more price action to determine, but it looks to me like it wants to break to the downside. This consolidation looks really bearish to me. So I don't know if that's going to happen because the Aussie is going to continue lower or because the USD yen is going to continue lower, or even better, if both of them actually move to the downside. But it looks like a good bet to me that as long as we remain below 76.50, we might resume lower, perhaps even accelerate lower. Kiwi yen looks somewhat better just because there is a possibility of a descending wedge here. Of course, this is not a descending wedge until it proves to be one. Regardless, I think that 72.30 is an area of resistance as long as we remain below 72.30. I would not be trying to fade this move. We might get a squeeze in all of those, but personally, I need more evidence because until that happens, I think that it's a very, very dangerous proposition. Gold and silver remain under pressure, especially silver, as you see, testing the lows once again. I really see no serious level of support until we make it to this horizontal support area. It has acted multiple times as support in 2018 between the end of summer and the end of the year. And that is actually at $13.90. So, there's another 40 cents to the downside just to retest that support area. Now, what would make me less cautious, less bearish about it is a break above this descending trend line support. But, so far we don't seem to be willing to do that. As you see, we're actually breaking another trend line to the downside. So, until proven otherwise, I think that you need to respect the downside. Now, platinum also remains under pressure. We had a couple of days of a rebound, but look at today's candle so far, an outside black candle, of course, too early on the day, but as the market participants start coming back, they seem to be selling it. So, $780 is the next downside area of support. Palladium still consolidating near the recent lows. It's a good probability that we're not done selling off here as well. Copper, little rebound for 2-3 days. We seem to be stalling at previous support area, now acting as resistance. So I would also be very, very careful here. I find no real reason why somebody would be buying copper here, and not at least with what the technical picture is. Now, at the same time, speaking about market jitters, if we have a look at both of the benchmark bonds, which is obviously I'm talking about the 10-year Treasury and the bonds, the 10-year bonds, you can see here that Treasuries are breaking to new highs. So the Treasuries are already trading in 1.5-year highs. Here, you can see it. I mean, last time we were testing this area, it was November 2017. Next upside target confluence of resistances at 125.20. You can see it here. So I do think that this is an ominous sign for potentially for risk. I'm not saying that the uptrend in stocks is broken. Actually, it's not. So we do see divergence here between stocks and bonds, which has been going on for several months. And at some point, something has to give. There's no question about it. But so far, it remains the fact, and we have to trade with it. So treasuries pressuring here, and bonds even worse, about to pressure the all-time highs. You can see the all-time highs are at 168.40. We are on our way there. Initially, we broke out of this descending channel, which was a multi-year corrective pattern. We then, after breaking higher, we formed a rectangle. We now broke above this rectangle and we're continuing higher. 168.90, 168.40, the all-time highs, is one possible area of resistance, and then it's the 161.8% extension of this rectangle at 168.90. And if we want to take the rectangle's range, then here it is. It's at 170.2. That would be the implied target of the rectangle's breakout. So these are potential upside targets. One thing is for sure, the bonds remain very well bid, with whatever that means for European risk. But as I said, we've seen this divergence. For example, the bonds are at all-time highs, almost at all-time highs, while the DAX is not that far away from the highs. In fact, DAX is at an interesting juncture because it has strived to, but it's still holding this ascending channel. So you want to be bullish the DAX. This is the area you want to be doing that, buying here, putting a stop loss below 11,800, because 11,800 is a very, very significant level. We've seen it in the past. Those of you that listen even sporadically to the webinar, how significant that area is. So you want to buy it here, put a stop loss below 11,800, and aim higher towards this 12,900 area, horizontal resistance area, also the 78.6. Looks like a good risk-reward proposition. On the other hand, you really don't want to be long if for some reason we break below 11,800. Now, other interpretations having to do with risk, having to do with the S&P 500, which of course is the benchmark barometer for risk globally. This might be a correction that finished, the one that found support here at the 23, the confluence of the 23.6% fib and previous horizontal support resistance area. So, there is also a good risk reward here for you if you want to be long. You don't want to see this previous low, which was at like 27.98, let's say 2800, to round it up, being violated, because if it does, I think that we're talking about a deeper correction, perhaps, an ABC with this being a little triangle here, in which case I would be looking for a move towards this nice confluence of supports. It's the 38.2% fib and the beginning of this wedge. Don't forget that, from theory, a full retracement of an ascending wedge that breaks to the downside is what is to be expected. That would actually mean a move down towards 27.20. And as I said, this is also the 38.2% fib from this low to the all-time highs. Okay, so personally, I like that interpretation more. So I would like to see another leg lower towards 27.20. That's why I'm still holding on to my short positions. Okay. Now, let me see. We have more questions. Yes. Hey, Blake, silver, gold seem to be under pressure. Yes, they do, and we already saw that. Does this affect your view on weak dollar? Now, let me give you my point of view, because I already gave you my point of view about the metals you asked for. Let me give you my point of view about the dollar. Now, and my point of view remains the same, which is the dollar remains bullish. Now, two things here. One, there is a clear loss of upside momentum. There is also a clear indication of that if you just have a look at the RSI. You can see this RSI divergence. The RSI is the most common momentum indicator. So in essence, it says what I just told you that you can see just by using your eyes. Okay, so RSI and just eyeballing the chart shows you a clear loss of upside momentum, but we haven't violated the basic principle of an uptrend, right? We still have a series of higher lows here in the dollar. Do we have a double top here? We potentially can have a double top here, but when would I take this? When would I, validate this as a double top? Very simply put, if we violate this low here at 97.03, okay. So if we break below that 97.03, which now that this purple ascending trend line support is ascending, it also confluences with that, then I'm going to start considering downside targets for the dollar index. Okay, until that happens, I'm fully aware that, we might be topping out here in the dollar index, but I would rather wait and have, price action move a little bit more and feel more confident about it than anything else. Okay, that's my personal point of view. So bottom line, a move below 97 is going to significantly increase the chances that we are talking about a double top here in the dollar index, and then we can start looking at lower targets. I can already tell you in advance that another lower target is going to be at 96.30, 96.40, and if we also break below that level, I think that then we might even see dollar weakness accelerating. Okay, so that's my personal point of view. Now, the fact, to return back to your initial question, the fact that the metals are under pressure, yes, also show that perhaps it's too early to point on potential dollar weakness. But keep in mind that it hasn't been unprecedented to see metals move against what the dollar is doing. Okay, on occasion it has happened, and on occasion it is also a move that has been sustained for several days, even weeks. So that on its own would not be enough for me to remain bullish the dollar if it breaks below 97, for example, right? So even if the dollar index breaks below 97, and let's assume that the metals remain under pressure, I would not be hesitant to start gaining some short dollar exposure just because of that. Okay, it plays a role, of course it does, but it wouldn't be enough on its own. Please cover the DAX and the USD NOK. Okay, without even having seen your question yet, I already did cover the DAX, and I think I was quite clear about my intention with it. Now, thank you for reminding me about the USD NOK, because it is interesting. If you remember, I was asking people to consider shorting it if they really like the downside against 882, because it was a good risk reward proposition. I said, listen, you like it the downside, here's the place you should be doing it. Because this 880, 882 area has proved its significance multiple times, right? And we also had some RSI divergence. Now, the fact that we got rejected once again from there, the fact that we have actually pushed somewhat lower, while at the same time crude remains under pressure, is not a surprise, right? Because we know that sometimes we might have, a little bit of a divergence in the short term. Now, is this sustainable? I mean, can, for example, crude start accelerating lower from here and USD NOK trading lower? It's not going to be easy, is the answer. Okay, so likely something has to give. Having said that, remember that 58 was my target in crude. I actually took profits there, more than 9% of a profit. And, that was a great trade for me. And I really don't know what's going to happen from here. That's why if you see my chart, in essence, I have two directions, two possible directions from here, right? One direction, we rebound from here, and it means if we rebound with momentum, it means that this concluded a healthy correction lower, right? Now, if we start breaking levels below 58, especially if we accelerate lower, then I'm going to start considering that perhaps this move higher after this impulsive move lower has already ended. And in that case, as I said before, USD NOK is not going to avoid breaking above 880 for a long period of time. So still remains a decent proposition against 880. I'm talking now about the USD NOK. Okay. But two things to consider here. 860 is a very significant area of support. As you see, this ascending channel support is now converging to that area. 860 has also been a horizontal support resistance area in the past. The 200 daily moving average was there. It's now actually a little bit above it. So two things to consider here. 880 is a very strong area of resistance. So if you shorted it, they're good. But on the other hand, 860 is a very significant area of support. And as I said before, if you see crude breaking lower, you really don't want to be short USD NOK as it approaches 860 because it's a good probability that it's going to find support there and actually accelerate to the upside. And I doubt it that another retest of the 880 area, if at the same time crude is collapsing, is going to hold, is going to be enough as a resistance to hold. And you know what happens when you have a strong area of resistance like that one in 880, when you eventually end up breaking above it, if that happens, there are several stop losses. You can be certain about it above it. And, if that happens, you can expect USD NOK to accelerate to the upside anything more than anything. Okay, so I wouldn't be actually trying to approach that as a possible false breakout. I would probably rather buy the breakout than try to fade it. Okay, so I think this is a clear thesis about what I think for the USD NOK and crude. Now, having to do with the USD CAD, because it is somewhat correlated. The same situation here. Crude has moved to the downside. USD CAD has not really responded. It remains in a range. I wouldn't be surprised if the next move for the USD CAD is higher. With this 136.60, 136.70 confluence of resistances being of interest to me, you can see it's the channel resistance of this red ascending channel. It's also a horizontal support resistance area has been in the past. So although if we want to see the big picture here in the USD CAD, I'm not at all enthusiastic about this move higher because it's definitely not impulsive. In the short to medium term, you have no reason to want to fade it, in my personal opinion. Okay, because we remain within an ascending channel, which has formed within another ascending channel. So bottom line, is there something imminently bearish with the USD CAD? No, there isn't. That's my personal point of view. Having to do with the USD ZAR, that's why I like having questions here, because you also reminded me I would have forgotten to show it. I think that the USD ZAR is producing a trading opportunity here because, simply put, we had, let me draw on this chart, we had this formation, looked corrective, clear corrective move, overlapping, slow. We broke above it and we formed a triangle. And what's happening now with this triangle? This triangle is breaking to the upside. So I would be very, very careful being short the USD ZAR here, especially if we break above this confluence of this horizontal resistance area and the 61.8% fib at 1475. I think that the USD ZAR is then going to be targeting that peak high at 1570. So you should be very careful being here short USD ZAR. There is a good probability that's actually going higher. And having said that, I think I covered all the questions, and we're at the top of the hour. Coach?
We have a no-show.
Oh, okay. It's okay. It happens. It happens,
Mhm.
bad for them.
Yeah.
So, you want to wrap it up?
Yeah, sure. Okay, everyone, have a great trading day. See everyone for Turnaround Tuesday. I do have a nice guest tomorrow from Renegade. So we're going to have a great interview the next couple of days. And then Anthony Crudelli will be with us Thursday, a Chicago brother, former floor trader, has a great show as well. So host to host on Thursday. And thank you so much, guys. Take advantage of this offer. Today the last day, Steve, or tomorrow? You're very welcome, Va.
No, Coach. They have the rest of the week.
Rest of the week. Wow. Okay.
But that's it then.
All right. Thank you, Alina. All right, everyone. Good hunting. Go join Blake and Steve and Amanda, everyone in private members chat, and I'll see you tomorrow. Adios. Remember, I probably said it already. I could say it twice. Don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. See you tomorrow.